Hello guys, welcome back to Riden Academia. We are still on our series on the partnership account, right? So in our previous video, we have been able to look at the appropriation account, the partnership appropriation account. We have also looked at the fixed capital account, right? And then in this video, we want to be looking at the balance sheet, okay? The balance sheet account for partnership. All right, so we want to be looking at the balance sheet account for partnership. Now majorly we have actually looked at balance sheet in our previous video, right? We have talked about the balance sheet, the statement of financial position. So this is going to be more like a revision, right, in case of the partnership account. So the balance sheet majorly has three segments. We have three segments in the balance sheet. We have for the asset segment, assets, the liabilities, and the equity. All right, this is the three component of the balance sheet account, right? Now your assets are the resources that are owned by the business. That resource is owned by the business, and then our format is that asset is capital plus liability, right? Like equity plus liability. Okay, then our asset, our liability, and our equity, it means we must have full information on these three components to be able to have a balance sheet, okay, to be able to prepare a statement of financial position. Okay, but in our last illustration, all right, we were only giving information as to the equity. All right, we're only giving information that pertains only to the equity segment. So in this case, you cannot really be preparing a full balance sheet because there was no information given on assets or on liability. In fact, the only information we have on asset was just the cash, okay, either the cash or bank, like we said for capital, right? Just the cash or bank. That's not a full information on assets. So we can only work with our extract just to prepare balance sheet using the equity, because that's just the information that we are able to get, okay, from the illustration. Like I said, it's more like a bit of a revision. So we're going to be preparing a balance sheet, but this time around we'll only be revealing the equity segment because that's just the only information that was given from the illustration. All right, so James and John form a partnership on 1st of January 1996, and the partnership agreement contains that the partnership's capital, for James we have 30,000, and then for John we have 24,000, and then we have that John is to receive a salary of 1,800 every year. The interest on capital is 5% per annum, and then we have that the interest on drawings is 2%. And then lastly, James and John are to share profit and loss in the ratio 3:2 respectively. Now during the year to 31st December 1996, drawings for James was 2,250, and then the drawings for John was 1,750 naira. Now our net profit showed 13,500, and then the partner decided to maintain fixed capital account like we did in our previous video. So today we are doing the C part, okay, the third requirement, which is to prepare the balance sheet extra. Like I said, the only information that was fully given to us is information that pertains only to the equity segment. All right, so that's the only thing we can review in our balance sheet. All right, only just the equity segment. So starting with our balance sheet, the name of our account owners are James and John. This is our balance sheet extract, right? This is our balance sheet extract, okay? Like I said, we just have only information for equity. So we're going to be working with just that information, right? So the equity in this case now we are having capital, right? Equity, under what of equity is our capital, okay? Like I said, since we are operating a fixed capital account, we're going to be bringing in our capital and then our current account, right? Bringing in our balances. So our equity, or let's use capital. All right, our capital for James, according to our fixed capital, we are having 30,000 naira, and then for John we are having 24,000 naira. This is our capital, our fixed capital balances, right? When we add, we'll be having 54,000 naira, And then the next thing we have is our current account, all right, where other information were dealt with. Our current account will still be bringing in our balances, all right. Okay, in our previous video we are able to see that for James we have a balance of 4,653 naira. Okay, so we are bringing in our balance from the current account for James. Okay, and then for John we have a balance of 4,847 naira. All right, so these are the information we have as our current account balance. By the time we add this up, we'll be having 9,500 naira, okay, from our current account balance. So this is our finances, okay, our equity or our finances. All right, then we're going to be adding up to have a sum total of 63,500 naira. Like I said, this information is an extract, okay, it's not really a complete balance sheet because the information we have here is just from our equity segment. All right, so with this we have come to the end of our today's video. Don't forget to like this video, subscribe to our channel if you haven't, and share our video with as many as you can. Okay, we'll see you in our next class. Thank you.